Hello, everybody. So, welcome back to Legacy Life Prep Podcast. I want to start off by saying thank you for everyone that has tuned in to episode one. I've been getting so much positive feedback about it. I've been getting so much feedback that I decided to change up my episode for episode two. Now, originally I was going to do something else, but I decided a lot of people are still a little worried about which type of policy should I get. Should I get term? Should I get whole life? Which one is beneficial for me and my family, etc., etc. Again, as I stated in episode one, it all depends on what you're trying to get from the policy. There's pros and cons to each one. So today, for episode two, I decided to go through the pros and the cons. Let's start with term. As I read the pros of term, follow along with me. Pro number one, the price. Listen, guys, term insurance is extremely inexpensive. Let me give an example. Let's say the average 25-year-old that's nice and healthy, average body weight, no DUIs, no felonies, and they're looking to get about $300,000 for their policy. Now, that policy might only run them about $20 a month. You guys may think $20 a month. No way, that's that cheap. But I'm serious. It's really that cheap. The price for term is extremely. Again, let me tell you, inexpensive. You just get more for your money. So the price is always the number one thing I like to tell people about when dealing with term. Term have different periods as well. 10-year, 15, 20, 25, and 30. And we'll talk about that a little bit later. Pro number two, the affordability and the value. Again, that's kind of like dealing with the price, but I'm going to take a little bit into that. So the value, you get more for your value. As I stated before, you could be young and get 300,000, 400,000, 500,000 to close to nothing. Most people pay more in cable bills and cell phone bills than they will do with a term life policy. So it's very affordable and you get more for your money. Pro number three. It's very easy to understand. As I stated before, you can do it for different levels of terms. Some have 10, 20, and 30. What that means is, say for instance, you say, you know what, in 10 years, I don't think I'm going to need this policy, so I only want to do it for 10 years. There you go. Understanding. The agent will write the policy for 10 years. Easy to run through, easy to understand. You want a 20-year term? Write the policy for 20 years. That means you had the policy for 20 years, and then that's it. You can either get a new policy or just not keep it at all. So it's very easy to understand. No complications there. Guaranteed prices. When the agent runs a quote for term policy, the prices are guaranteed, and you're going to get more for your money. So that's another great thing about term policy. The conversion option is the next pro that I would like to discuss, but this is a good one. So a lot of people don't even know about term with ROP. That means term with return of premium. So what that means is, if you get a 30-year term and you outlive that policy, you can convert that policy into a whole life, or you can just get all your premium back. I call the term with ROP the best of both world policies, because if you outlive it, you can get your money back, or you can just say, you know what, I want to turn it into a whole life policy, and I just let it sit and never pay for it again. And you could be 30 when you first started and 60 when it ends. So at 60 years old, you may be sitting on $50,000 whole life policy, just sitting there, and you never pay for it again. So that's a good thing with the conversion option. Pro number 6, the flexibility. Term life is very flexible. It's not standard. You can change it, you can up it, you can downgrade it, whatever you want to do. And it's just good to have all the way around. But again, the best thing about term will always, for me, be the price. As an agent, I always recommend term for certain people to see what they like to do. Now, we're going to get into these cons, because like I said, all policy have pros and cons. So I only wrote down a few cons that I think is great for to talk about with term policy. Excuse me. Con number one, increase in prices. Yes, as the years go on, your term policy may increase. It may not increase by that much, but it does increase. There will be a difference from what you're paying at 30 than what you will be paying at 60. So yes, the price increases, and a lot of people do not like that part of having a term policy. Con number two, the cost prohibitive over time. Yes, it does. So as time goes on, the cost of it may go up, the value stay the same, but it does go up on you. So that's something to think about if you're thinking about getting a term policy. Con number three, it's not designed to last a lifetime. As I stated before, some people get a 10-year term, some people get 15, some people may get 20, some people may get 30. And you may outlive that policy. And if you don't have ROP, the best of both world policy, return the premium, you will not be getting anything back from that policy. So you have to think about that. Con number four, no cash value. Ooh, this is a good one. Cash value has its pros and cons, but I'm going to get into that another time. So, term does not have a cash value. A lot of people get into policies and the first thing they ask me is, well, do this policy have a cash value? No. When it comes to term, it do not have a cash value connected to it. However, with term, you can do an investment outside of your policy that will help you grow interest. So those are the pros and cons of the term. Now, let's get into these pros and cons of whole life. Pro number one, it's permanent, baby. You have this policy for a lifetime. That's right, it's permanent. You have it for a lifetime. So if you get a policy at age 18 and you die at age 99, you have that policy for your whole entire life. There is no term period. It's not age 18 to 28, 18 to 38. It's your whole life. You'll be paying to that policy until the day you die. So it's permanent. Pro number two, the predictability. So whole life is very predictable. You know what you're getting yourself into. There is a cash value connected to it. So that's another pro that I don't have listed, the cash value connected to it, which means that you have your life insurance policy and you also have a cash value connected that will grow for you over time. So that's a good thing. The tax breaks. The tax breaks is pretty good when it comes to whole life policy because again, it has a cash value connected to it, which term does not. So that's another good thing to think about when you're considering, hey, should I get term or should I get whole life? Whole life does have a tax break. Pro number four, the potential loan collateral. So I'm going to elaborate on this a little more than I did on the other three because I think this is the most important one. A lot of people have asked me after my last video, episode 1, about getting a loan from a policy. Yes, you can take out a loan of your whole life policy while you're alive. So when you're taking out that loan, say for instance you have debt in a student loan or your mortgage need to be paid or the child may have gotten into something, you need to take out a little bit of cash. Don't worry. When you have that whole life policy, you can do just that. You can go to the policy and say, hey, I got $100,000 policy. I need to take out $2,000 because I have some important things I need to take care of. So that's the positive thing about having a whole life. You can't take a loan from it because sometimes life just get hard and you might just need a little extra cash. So that's a really, really, really good thing about that. Now, the cons of it. The cons. The cons of having a whole life. It's a higher cost. It's not as inexpensive as term. When I say higher, it's double the price of having a term policy. For an example, you can have a $50,000 policy for term that costs you about $15 to $20 a month. that same policy, if you had a for whole life, will run you probably about $60 or more for the same amount of coverage. So it's much, much higher than term term. So you may want to consider that too as well when dealing with whole life. The smaller death benefit. Yes, the death benefit is smaller when you're having a whole life policy. You can't afford to get a $500,000 policy with whole life because it's going to be extremely costly. So the death benefits are usually smaller when it comes to calm. The lack of investment control. You do have a cash value, however, you can't invest like you want to when it comes to a whole life. So that's something to consider. I also want to tap into some other cons that I do not have listed here about whole life. When you pass away, your family can either get the death benefit of your policy or the cash value. Now, I wanted to elaborate on that a bit because I think this is a big one that you all need to know. When you die with whole life, you are putting money into that policy, a cash value. But when you die and you sign your John Hancock to that policy, your family cannot get both. They can either get the death benefit or they can get the cash value. 9 times out of 10, that death benefit is going to be way more than the cash value. So your beneficiary is going to probably say, I'm going to take the death benefit, which means whatever cash you had saved into the cash value is gone. Your beneficiary will not be able to get their hands on it. So that's a good con I love people to consider because, you know, they're leaving stuff to their family. I mean, you will want your family to get both, but you cannot get both. So that is definitely another con. Now, I'm going to do a quick comparison of term versus whole life following on. Term. It's a temporary insurance policy with an expiration date, which we already discussed. It protects your family from a loss of income, and that's a good idea until you've raised the kids or paid off the mortgage. Lower payments to start off. The premiums increase with each renewal. There's no cash value, and the benefits transfer to beneficiaries tax-free. Whole life. It's a long-term coverage for as long as you pay the premiums. It ensures that your burial costs and other final expenses are covered. It costs a little more but has flexible payment arrangements. Premiums does not rise as long as they're paid. It builds cash value, and the benefits transfer to beneficiaries tax-free. Now, we've already went over the pros and cons of both. So now I'm going to take just specifically on whole life. Whole life insurance provides coverage for the life of the insured. In addition to paying a death benefit, whole life insurance also contains a savings component in which cash value may accumulate. These policies are also known as permanent or traditional life insurance. Now, let's go a little bit more in depth about the advantages of whole life insurance. Whole life insurance lasts for a policyholder's lifetime, as opposed to term life insurance, which is for a specific amount of years. Whole life insurance is paid out to a beneficiary or beneficiaries upon the policyholder's death, provided that the premium payments were maintained. Whole life insurance pays a death benefit, but also has a savings component. Can be invested. Additionally, the policyholder can access the cash while alive by either withdrawing or borrowing against it when needed. Now let's tap into some disadvantages of whole life. Elaborate a little bit on that. Higher costs. Compared with term life insurance, whole life insurance is costly between 5 to 10 times more expensive. As I stated before, it's very costly. One reason is that part of your premium goes to fund that cash value account, Remember I talked about that. So it isn't entirely wasted. Another is that insurance salespeople typically receive larger commissions for selling whole life policies than term policies, a fact that may also help explain why permanent insurance policies outsell them. Smaller death benefit. The corollary to whole life being more expensive is that whatever amount you spend on insurance will buy you a much lower death benefit than you could get with return policy, as I stated before. So if you need a lot of insurance, as you might, if you have a young family, depending on your income, whole life may not come near providing an adequate amount of protection. Keep that in mind if you have small children or a home or anything that you really have invested in that may need your income when you pass away. Lack of investment control. With a whole life policy, the insurance company invests the cash value part of your policy in whatever way it chooses. Yep. Let me say that again. The insurance company invests the cash value part of your policy in whatever way it chooses, just like a bank. Just think of that. If you're a capable investor and comfortable taking on some additional risk, you might achieve greater returns by investing that money on your own. As I stated with term policy, it may be better to just make your own investment. That is why consumer advocates have long suggested that people buy term and invest the difference. To make that strategy work, of course, you actually have to invest the difference. Yeah. Let me elaborate on that a little bit. So, as I stated, with term policy, it does not have a cash value. However, you can buy term, so you can have a higher value policy and invest the difference. What that means is just find some type of investment and start investing your money monthly, weekly, however you want to do it. So that way, because some people are so focused on that cash value their whole life has, you can have your own cash value in your investment and it's separated. Which means when you're investing, your family can actually get your money when you have term and you pass away. And guess what? They can also get whatever you invest. So that is something to think about. Now back to what we were discussing, the term life insurance, the advantages and disadvantages. A term life insurance policy is the simplest, purest form of life insurance. Yes, it is. You pay a premium for a period of time, typically between 5 and 30 years. And if you die during that time, a cash benefit is paid to your family or anyone else you name as your beneficiary. When you outlive your term policy, you will no longer have life insurance coverage, but you can convert to a permanent policy or buy new term insurance. That's when the ROP comes in mind, return of premium. Advantages of term policy. The price. I always talk about that. The price. Term is the cheapest form of life insurance you can buy. Affordability and value. With term, you can purchase the amount insurance that you need without paying more than you can afford. This is especially true when you are young and need a great deal of insurance to protect your family. Converting short-term needs, term life insurance is a perfect solution for covering temporary obligations. Many people purchase mortgage life insurance, which is essentially term life insurance that pays off your home in the event of your death. Keep that in mind for the home buyers. It's easy to understand. Term insurance is simple. With term, you are buying pure death protection without equity. It's cheap and doesn't have a lot of complicated variables. Guaranteed prices. Term life insurance offers guaranteed rates. Depending on your needs, you can lock in rates for 1, 5, 10, 15, 20, 25, or 30 years. These level term policies are extremely popular. In fact, you can even get a lifetime guaranteed term policy. And let's talk about their conversion options. Most term policies offer conversion options, allowing you to exchange your term life policy for a more permanent policy without proof of health. I'm going to pause right there for a second. I have to elaborate on that because I have lupus, as you all may know or may not. And this is good to know for people that have a policy prior to having health issues. So, like I said, I have lupus. I had a policy prior to having health issues. However, because I'm maintaining my policy, I can exchange that into a permanent policy along the years after my policy is up. My term is up without having to show any proof of my health issues. That is amazing. I have to say that because sometimes we just wake up and things happen, life happens. I didn't wake up wanting to have lupus, but I do. Some people didn't wake up wanting to have cancer, but they get it. You know, things like that that you're not born with. So that's good to know and good to understand about term policy is as long as you keep that policy maintained throughout the years and you out that and that policy matures and is done with, you can convert it to a whole life if you have return the premium without showing your health history or your health issues. Keep that in mind. And let's get back to the paper. These level term policies are extremely popular. In fact, you can even get a lifetime guaranteed term policy. Okay. The options can be invaluable if you develop a health problem or can no longer medically qualify for life insurance. Good to know. Flexibility with term. You can separate the life insurance from your investments. The best thing ever, as we just spoke about, this buy term and investing difference philosophy has become increasingly more popular in the last 20 years. Very, 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 very good to know. The disadvantages of term life insurance. Increasing prices. Premium payments for term life insurance increases after the initial guarantee period. Cost prohibitive over time. Term insurance is designed to be temporary and therefore will become cost prohibitive at some point. Not designed to last a lifetime. And finally, for all of you that ask about cash value, term do not have a cash value. Now, with all of that being said, which policy do you think is best for you? That's for you and your family to decide and sit down and have a conversation with your agent. So it doesn't matter if it's term or whole life. It all depends on your family needs, your family wants, the things that you may be leaving behind. You have to take all of that in consideration when you're trying to buy a policy. So this term versus whole life thing, it's all depends on the needs of the family. So thank you for tuning in to Legacy Life Prep Podcast, episode 2. Be sure to tune in for episode 3 because I will have some guests and it will be live. Stay tuned for the release date. Have a good one.